A quick update on my Questrade margin account, and I'm unveiling a new account and talking about ETFs today. All that's coming up. Welcome back to the channel, guys. My name is Sean. If you're new here, I'm documenting my journey to financial freedom. So if you're interested in personal finance topics, please consider subscribing. So we've hit the 200 subs mark, so I'm going to be revealing a new account today that makes up part of my net worth. It is pretty much all an ETF, so if you're interested in just that part, I'm leaving the bookmarks to that section of the video in the description like I always do. But first, I'll do a quick update on my margin account. This is just going to be quick because I haven't really made any adjustments or any rebalances or made any purchases or sales on this account, but I just thought I would go through it quickly. I'll put up the image here from my monthly statement. As you can see, it hasn't really moved at all, increased or decreased in value, and that's mostly because the stocks that I was able to buy during the low point of the market have kind of balanced out some of the dips in the other ones. So Canadian Western Bank and CIBC have been doing well. I've made a little bit of money off some dividends, and it's balancing the dip in Air Canada, Banco Macro, and some of the other stocks that haven't been faring so well. In the middle there, Facebook has been really strong for me. Kraft Heinz has gained a little bit of value. So overall, there hasn't been much to really talk about since the last video I made. If you guys are interested in a walkthrough stock by stock, I'll leave a link to the video right here that I did last time. That goes one at a time through what I hold in my margin account. The one small thing that might be worth mentioning is Assertio, which is a pharmaceutical stock, has gone through a merger and has sent this package over to me for review. I guess it goes out to all the stakeholders. So a little bit of nighttime reading there. Since then, the stock has kind of spiked up a little bit, went up just over the $1 mark, and then kind of back down to just under the 90-cent mark. I'll be looking at that, maybe doing a little bit of research. I know the merger was saying it was going to be a positive thing. We'll be keeping an eye on this one, as we do with the rest of the stocks. All right, so because you guys have been so great and we passed the 200 subscription mark, I'm unlocking a new account for you. This is my TFSA, or tax-free savings account. For my American viewers, it's the same as a Roth IRA. The principles are the same. Essentially, it's a tax-sheltered account. You can fund it with after-tax dollars, and you don't get taxed on any growth that occurs in the account, including dividends. The only catch is there is a limit to how much money you can contribute to this account every year. A TFSA can come in the form of a regular savings account, but I of course use it for investing to maximize the amount of tax benefit I would get out of this account. By the way, if you guys want to start your own Questrade account or don't have one yet, I have a link in the description for Questrade to get you $50 free, whether you want to start a portfolio or in a regular investment account. So you can set up a TFSA just like this and have $50 free to invest when you do. So really quickly, let's just talk about how ETFs work and what they are. So ETFs are, very simply put, kind of baskets or groups of stocks, and they can be grouped together by commodity or by industry or by country or even by a specific market. So let's say that you want to get into technology stocks or even marijuana stocks, but you don't really know where to start. Well, you can get an ETF that has a collection of different marijuana related stocks and get in on that industry without really having to go in and research each individual company. The example we're going to talk about today is an index ETF, which tracks a specific market, in this case the S&P 500. Now, this little bit of convenience does come at a small cost. There is a bit of a management fee that is involved with ETFs. However, this is typically a lot less than what you would pay at a big bank with mutual funds. And the simpler and more straightforward an ETF is to manage, the more passive it is, the lower the management fee will be. Now, before I get into VSP.TO, which is the ETF that I'm invested in for this account, just a quick reminder, if you guys are finding this useful and you want to learn more about investing, please hit the like button and subscribe for more videos like this. So let's talk about VSP.TO as our example for this video. So it's an index fund which tracks the top 500 companies, the S&P 500, top 500 companies in the US. This ETF mimics that index and adjusts everything automatically. So when the S&P 500 is up, this ETF is up. When the S&P 500 is down, this one is down. This particular ETF takes out the variability of the exchange rate, which is something that Canadians investing in the American stock market have to think about. So it's Canadian hedged, meaning it takes out that part of the equation. Now, for any Americans watching this video, one that is the most popular, I think, is called SPY or SPY, and that's the most popular S&P index tracker from what I'm finding online. So that does the exact same thing, tracks the index. So what that also means is when a company falls off the top 500 list, it's automatically taken out of this ETF. And when a new one comes back on, it's obviously put back on. I don't have to worry about adjusting or rebalancing any of these 500 companies, and I certainly do not need to research the top 500 companies. Another advantage is, imagine how much money I would have to spend just to buy one stock from each of the top 500 companies. Well, when you have an ETF, this is trading right now for 53 Canadian dollars. You can have a piece of all 500 for 53 bucks. So ETFs offer a little bit of advantage in that it's a lower cost to enter the market and buy a piece of the index. So as I said, this automation does come at a small cost, but it's only 0.09%. So managing my account, which I'll show you the numbers in a second, is only going to cost me about $90 a year. Compare that to the 2.5% I would pay for an aggressive growth account at a big bank. That's what I was paying before, and it was costing me $2,400 a year. That's a huge savings over time to make every year that you could use to just keep investing and growing. Now again, not all management fees on ETFs are lower. Usually if there's a lot of management involved, if it's more active, you will pay a higher MER. But on average, I find that these are much lower than the brick and mortar traditional bank mutual funds. In fact, if you've seen one of my videos from last year, again, I'll leave a link up here, I explain why I moved from a brick and mortar bank over to a fintech company like Questrade and how much that has really saved me overall. But really the reason I did this was I felt I could save on fees. I just had to do a little bit of research and understanding, and I would get better performance and make more money in the long run to get me to financial freedom sooner. So here we go. Here is the second account that you guys have unlocked, my TFSA. So the value of this account is $96,270. $90,600 of it is in VSP.TO. I do have a little bit here in Canadian Western Bank and CIBC. When I bought these same companies for my margin account, I bought a little bit in here because I had some cash at the time. Every month I'm putting $1,200 into this account, and unless I've got another great idea of where to invest it, it typically goes into VSP.TO. But for all intensive purposes, this is just a growth account, and it follows the S&P 500. And that is the amount that is in there right now. So as I do updates, I will visit this again, keep you guys updated on what this number looks like as things continue. Now let me quickly talk about the goals of this account, because you may be wondering, like, Sean, why have a margin account and you're doing ETFs at the same time? Keep in mind, I don't have a short-term goal for this account. It's simply a tax-sheltered account that I'm using to maximize the growth of my money. If you want to maximize growth, of course you expose yourself to some risk, but I have a long timeline ahead of me, so I should be able to ride out any bumps that are going to be there along the way. Your goals and timelines might be different than mine, so the way that you plan or manage this account will obviously be different. Everyone needs to do what is best for their timeline and their goals. That said, there are two more reasons I sort of wanted to try this. One, I wanted to test the theory from Money Master the Game. That is a book by Tony Robbins that kind of woke me up to realizing how much I was paying in mutual fund fees, so I kind of wanted to test the theory out. The other reason was I have different accounts with different investment vehicles, and this was one that I wanted to compare to others. So I'll be testing this against a growth portfolio versus a margin account, the one that I've already revealed. I want to see what does better. So this video is just to reveal, I think ETFs are well worth understanding because they're probably the investment vehicle for choice for most people. If you guys are interested, I can make a video that talks more about ETFs, the risks, the ways to set up an ETF portfolio. If there's interest in something like that, please let me know in the comments and I'll work on something for you. But for now, very high level, here are the pros and cons of ETFs. So pros, they give you access to many stocks across various industries at a low cost. So that's what I was talking about. It would cost you a lot to get a stock in all 500 of these companies, but you can get in very easily with an ETF. They have lower expense ratios and the commissions are usually quite low or free. By the way, if you do want to buy ETFs through Questrade, they don't have any fees. There is a little bit of risk management through diversification. So if you get in on a certain industry, it is a little more diversified buying a basket of shares than buying individual companies. And as mentioned, you can get in on different industries, world markets, and index funds through ETFs. Some of the cons are you may pay some higher fees for management if they are more of an actively managed fund. ETFs might maybe limit your diversification as opposed to maybe going for index ETFs. But really these cons are just something to be aware of, and it really depends on how you're designing the portfolio for your account. So a simple way to put it is that ETFs are the first level of automation or simplifying your account when it comes to investing. If you really love reading quarterly statements and getting into the nitty-gritty, yeah, margin account and individual stocks might be right for you. But if you're like a lot of other people and don't have the interest or the time to do so, ETFs, again, are easy access to markets and index funds that don't require as much research. This is also a nice, easy way to sort of dip your toe into starting to invest if you don't have the confidence to go for individual securities or individual company stocks. Using the diversification from ETFs, you can limit your risk, but it's a nice middle ground between totally automated portfolios and individual securities. But ETFs can also be a great way to just set up a portfolio with just a few simple transactions. You could mimic the portfolios that banks offer by purchasing VSP.TO, a Canadian index fund, and then a world market index fund. And in just 3 simple transactions, you've got a pretty good aggressive growth style of portfolio. Yeah, you will have to go in there once a month and probably rebalance it a little bit, but it's a lot simpler than doing that for 20 individual stocks. Well, that's all I have for this reveal video on ETFs and my TFSA account. As the channel continues to grow, I will keep unlocking accounts for you guys and revealing them on this channel, and we'll go through them every time we do a account update and essentially updating my net worth for you guys as we make our trip to financial freedom. One last reminder, if you found this useful or valuable, please remember to hit the like button, subscribe to the channel for more. Until then, have yourselves a great week, spread the wealth, and I'll see you in the next one. Bye. This ETF mimics that exchange. This ETF mimics that. If you guys are interested in making totally automated, and it's a